Good morning from Chicago traders. It is 8:03 a.m. Chicago time. Sorry about the delay this morning. It is Monday, July 11th, 2022. This is episode number 2269. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning is likely to give us quite a brief video here. There's not too much to report. The Convergent Trading pre-market summary sheet showing that the overall sentiment is mixed, given the percentages of the indices in terms of what the risk appetite is. However, as you can tell, it has a tinge of bearishness to it, in that the S&P has traded below Friday's low, day session low, in the overnight session, and that's giving some hints as to some weakness there for the session potentially. But again, it's really mixed to mild risk off. We see money being allocated to the treasuries, the 10-year notes up, the 30-year bonds up, and the Eurobond is up as well. The dollar's up. Basic materials, autos, techs, and some other key sectors are down. Asia's mixed. Japan is higher after the events of this weekend. The big news that has people kind of watchful and taking pause is that Macau has shut down for having an increase in COVID cases. China is monitoring the same situation. We have another situation where China could be shutting down and kind of locking things in again, and that creates supply chain problems as they are the manufacturer to the world. Probably should do something about that. But it's that's where we stand in terms of the overnight economic releases. There wasn't anything of any significance in the overnight session. We do get Bank of England's governor Bailey speaking at 10:15 Eastern. At 2 p.m. we get Fed's Williams. And this evening, Australia NAB business confidence, that's a key figure, expecting 5. The prior is 6. So here's the thing with today. Today is really the kind of the bowels of summer. Like, we are now really in the summer trade. So I would say temper expectations. It's a good time to exercise strong discipline in that you're not sitting here chasing moves that never materialize. So it is really important to recognize that, hey, this is that time of year where the market really slows down, and we've kind of been spoiled over the last couple of years. I wouldn't say spoiled because the reasons behind it are just awful, but we've become accustomed over the last couple of years to a lot of movement throughout the summer, which is not normal. We do get earnings that start to kick off with Pepsi, PepsiCo, and then the markets are going to be looking for the key players, which are banks, investment firms, people like that are impacted by the movement in the yield curve and so on. That's going to be really important. But days like today, where we had non-farm payrolls on Friday, and then we have a Monday with nothing on the calendar, not much overnight. And you could see here on the sheet in front of you, right in the center, ES overnight status, the auction condition is balanced, 100% inventory is short. Like, this is the kind of stuff where you get really picky. In other words, you want to be in this environment committing only on your A++ setups, really. And you might find days where there just isn't much to do and it'll feel like a waste of time. It is not, because you're staying current with the narrative You're staying current with the narrative and continuing to hone your process. It's all about process, right? Money comes as a result of process. It doesn't come as a result of random doing. So, as you know, top-notch surgeons, we don't operate based on how much we make. We operate to perform the procedure for our patient, and then the payment comes later. The money comes, and it's kind of like this is just you and me and everyone involved on a day trading basis practicing our process. This is the most important message I want to put out there for this morning. Back to the ES again, balanced condition, 183,000, so kind of lightish compared to the prior sessions. 100% inventory, 100% of the inventory short. The range is only 37.25 points, which is well within one standard deviation. Point of control at 38.7550. As a comparison, the point of control of Friday was 39.06 so higher than the high. And we are trading around the Friday low, and we've been one-time framing up. So here's what was expected on Friday. I was looking for to push to 95. Expected some reaction at 95 or 3900. I was looking for it to squeeze lower as the primary scenario. Just the way the market was set up, it looked to me like we may be topping against the 39.14 that we had the prior session. Barring that, we would go sideways, look for an impulse up sideways, and then continue to 39.20. Here's what we got on Friday. Let's switch to let's switch to active. Here's what we got on Friday on the day session. We opened up, tested higher, tested lower. Oops. We opened up, tested higher, tested lower, put in our IB, consolidated here. Really nice little push there. Consolidated, and then impulse. This is the impulse I showed on the prior chart. This is this impulse right here. That. Okay? And sorry, a little clunky today. So that's the impulse. So we're expecting 39.20. It went to, what was the high on Friday? The high on Friday was 39.22 even. 39.22 even. And then you get this monster kind of move back into the middle of the range. Consolidate, tries again, pushes almost to 39.20, and then closes somewhere in the middle of the range. So overall, it accomplished scenario 2 on Friday, but since then, let's just scroll over to see what has happened so far in the session. Since then, really, it is holding steady down here, and you can see the profile is somewhat balanced. Not the prettiest balanced profile there is. The point of control at 38.7550. The VWAP is 38.7876, and the mid at 38.82 even or so, between even and a quarter. So what we have is a market that's staying underneath these key day references, trading at the overnight point of control, having tested below Friday's low. This is Friday's low right here, 71.50 for the day session. This is for the full session, or the prior full session. And so we are checking Friday's low. We've gone through it and broken down, came back, tested higher low, break on price action, pull back to the prior low at 71.50, go away, back to the mid, pull back to 71.50, and here we are holding right here. So that 71.50 has been played a couple times. Relatively weak low. Look at that low. That's an iceberg low. We can detect that by going to our order flow chart, gotta go way back. We can detect that by looking at this. Look at this explosive move down, really one-sided move. See these imbalances? This is a sweep. Wherever it says zero, see where it says zero there? It means it did not trade back and forth. Very weak structure, and these are the bids that it swept on the way down. That is those are the true bids that actually exist and traded out. A big sweep, and then it gets to the bottom here, right? So it gets to the bottom and it hits for 222. So you think, okay, that's a pretty weak bottom. Trading both sides, this makes it a weak bottom. Then it comes back and it hits for 43. Little imbalance here between a 43 and a 0, diagonally across. Tests again, gets to 127. Little imbalance against the 3 that's across, and so on and so forth. And you can see that it just kept coming back. This is an iceberg here at the low, 63.50, traded 366 on the low with a whole bunch of large lots there, large lots in the first place, and so on and so forth. So this has been kind of a wall here. We'll see how that's treated. But the point being, with so much trading at the bottom, you don't have a taper to almost zero. You know, down here we want to see 5 lots, 20 lots, 15 lots, not 816 contracts trading at the low. This makes it a multi-low, a weak low. So I'm expecting this morning for this thing to move 10 points down and retest that. Okay, so that's what happened when we weren't here. I don't know what the catalyst is behind that, but what I'm seeing overall is weakness. Let's look at the intraday. The intraday, the narrative is we moved away from that important low, that low we've been talking about for the last 4 weeks, and we pushed to 39.50. We made a couple of attempts at the 39.50, sold off a couple weeks ago, went into this box. This box at the beginning of this month, and we traded back and forth inside of this box. And since then, we broke higher. So this was last week on Wednesday. We broke higher. Thursday, we pushed to 39.14, if you recall. And then Friday, we pushed into 39.20. And what we did on Friday, when I zoom in here, is we created an overlapping profile. We created an overlapping profile. So we've moved from upper box to lower balance. This is your breakout day, and then we have more balance here for Friday and Thursday, and we are kind of starting to ooze out of it. I'm saying ooze because I don't see any quick breaks or anything like that. In this box, I'm charting the range of the blue profile, which is the day time frame profile. I'm keeping an eye on the overnight, but to see how the overnight's migrating. So you can see this overnight profile moved up here to a P-shaped profile, to a balanced profile, and now we have a bit of a B-shaped to balanced profile with a weak low. So you can see that the overnight session is starting to roll over, and I'm expecting the day session, which goes from here. So this is your breakout day. Back here is the balance. Then we move into this profile here. Then we move into a profile that tries to push to 39.20. But what do you notice about Thursday and Friday? What do you notice about Friday that really attracts your attention versus Thursday? A couple things. Higher low continues, right? So we have one time framing up. The low is done here, but I'm just marking the profiles. Higher lows, so 1 TFU, one time framing up on a daily. We're pushing higher. We notice that the point of control migrated well between Wednesday and Thursday, but what do you notice? Despite the price action higher high, higher low, oops, So low, higher low here. Despite the higher high and slightly higher low, what do you notice? We moved the point of control up here, and then the point of control did not shift. So the price action is saying bullish. The profile is saying they just could not, buyers could not explore and force acceptance of higher prices. That's what that's saying. And what it's, in order for this to happen, by the way, in order for this POC to develop and to be the same, there has to have been active sellers in these prices that are preventing price from quickly moving higher. So this becomes one of the early hints that something may be changing. Maybe is the key statement here. Maybe. We don't know until we see how it's treated next. And then the next thing that happens is we settle at 39.01 quarter, but then we cannot trade there at all. We immediately drop below, and so this becomes a really important resistance area here at 39.06 or so. 39.06 is this 2-day point of control, and we need to watch how this goes. So even if it breaks through the mid, the full session mid from below, I'm still going to be skeptical of buyers taking over until they take the 39.06 and hold above for continuation. Then I'll target the 20 and start looking at that 39.40, 39.50, 39.50 being the big area that got rejected, also with an iceberg, a massive iceberg, like 7,000 or 8,000 contracts traded there before it failed. But for now, what we have is an impulse down, pullback, and there's a minor continuation here, but the real continuation on the impulse hasn't taken place on a week low. So I'm going to favor the short side early this morning. Do you follow the logic behind all of that? I'm throwing a lot at you, but that's basically where we are. So again, we moved from this 37.75 balance. We had the breakout day on Wednesday. Thursday had a balanced profile. Friday put in a higher low, higher high. On the volume profile, same point of control in that 39.06. And then what we have is today the market is here. So hey, we have traded the bejesus out of this, right, over these 2 days, 2 million some odd contracts, and now we're trading below that. There's a lot of overhead here, and there's room to the downside to get back to where? To get back to this area right down here at 39.40, which hang on, I believe I marked as, yeah, the over under. See this gray right here? So 39.40 becomes, this 39.40 area becomes your key over underline. This is kind of the key area that's likely to be tested down here on the downside. Okay, so I think you get the point. I don't need to beat the heck out of it. Overall, looking at the overview since the beginning of the month, we're slightly above VWAP and are expecting to go where? The monthly VWAP is at 38.35. What did I just get done mentioning? The 40. It's really 38 to 40. So this becomes a natural retest area. We're coming back to VWAP, right? 38.40. Did I say 37.40? I mix my 100 handles. This is why I don't like to mention the 100 handle, especially in this market that goes from 36.75 to 37.75 to 38.75 before it turns. So the 38.35 matches this 40 and 38 zone, the over under, oh, 39.40. I apologize about that. Not to confuse you, I'm talking about 38.40. The monthly VWAP's at 38.35. Just to zoom out and take a bigger look, the Dow is moving to it. The Nasdaq's still higher. There's some key areas here at 11,800 on the Nasdaq. You can see the Russell's is 1735. The bonds getting some relief. The bonds have been rallying for a few days. and getting some relief to the downside now, and so on and so on and so forth. Same with crude. Crude is in this downward channel now, after ripping up, and same with natty gas. So that's the overview. Um, I think you guys have a clear picture of what's expected for today. I mean, I outlined that. It's the key numbers are 39.50 above, 39.50 above. The key number is 38.40. I won't make that mistake again. I learned from my mistakes. Then you have a key week low, right? Week low. We have a break of the one time framing up, which started back here. One time framing up, one time framing up, one time framing up, and that's breaking. So the daily is breaking. And most important piece of information is look at the prior week versus last week. Remember, last week was a holiday week. Monday was the U.S. Independence Day. Look at this whole week from last Monday, last Tuesday. We traded just inside of the week with almost half the range. This is an early clue. This is an early clue that you have to back off. That the volatility is getting sucked out. And you have to back off, and you have to be much more selective. And this is what I'm encouraging you to do. So pay attention to the week low. Pay attention to the overnight point of control, which is up here at 75, right in here. Then you have the full session VWAP right on top of it at about 78, and then you have the full session mid at about 82. And even so, even once it gets through that, I'm still very skeptical into the 39.06. I'm skeptical of any rally up into 39.06. So it could come up and fall from here, it could come up and fall from here, it could come up and fall from this stock zone here at 92 or 06. I mean, I know that doesn't help you much because I'm not giving you a definitive answer, but we're moving from balance to potentially a choppy Monday after non-farm payrolls. You need to be aware of that. This wasn't a short video. Again, very, very difficult to make them short. Good luck today, and I'll catch you tomorrow morning. Take care.